In this video, I want to talk about Bollinger Band. Bollinger Band is a technical indicator developed by a famous technical trader, John Bollinger. It looks like this. Here is a picture of the stock price of Amazon from 2016 to 2021, 5 years of time. And the Bollinger Band is a band here, shadowed here, surrounding the stock price of that period of the time. So intuitively, we find that the price of Amazon usually usually falls inside the Bollinger Band. Occasionally, it might get out of the Bollinger Band, but most of the time, it's within that range. When it touches the lower band, the red line here, it gets some resistance and the price will bounce up. When it touches the upper band, there will be some resistance again, and the price will fall below, and it's going to be fluctuating surrounding the center band or the middle band. So now let's talk about how Bollinger Band is defined. The Bollinger Band, as we have seen in the previous picture, consists of three bands. The middle band is the simple moving average of the stock price within a certain amount of the time. So usually we set it to be 20 periods. The period here could be either a day or 5 minutes, whatever unit you want to pick for your period. And the center band is just the moving average of the past 20 periods. Now let's think about what is the meaning of this moving average or the middle band. Usually, the stock price or any kind of asset price will be the consensus of all the participants in the market. So the past 20 period moving average can be thought of as how people agree on the underlying value of the asset. So without any fundamental changes about the underlying asset, it's very unlikely that suddenly all people think the asset has more value or has less value. So in the short period of time, or let's just say in this moment, right now, it's the price will be close to the moving average or the center band. But how close is close? That's why we introduce the upper band and lower band. The upper band will be m times sigma of something. Sigma stands for standard deviation over last n period of TP. TP means typical price, and typical price is just the average of the high price, low price, and close price of a certain period in a single unit of time. So sigma is the standard deviation of the price from the last n periods. So what does that mean? It means that how volatile the current asset is. And m is usually set to be 2. So the upper band and lower band are just the prices 2 units, 2 times the standard deviation away from the center band. So if we know something about statistics or standard deviation, we know that it's very unlikely that the price will get out of the 2 times of the standard deviation. If we think about if nothing big happens to the underlying asset. But of course, if something big happens, let's say the income statement of last quarter just comes out and the company performed very bad or performed very well on a certain quarter, then it's very likely suddenly all the participants in the market change their views about the value of this company. Then the price might change very dramatically. Otherwise, it's reasonable to assume that the price will be trading within the Bollinger Band. Okay, so now let's just recap. What does Bollinger Band mean? The center band is the simple moving average of the price over the past 20 periods. And we also compute the standard deviation of the price from the past 20 periods. And we assume that the price will be within 2 times of the standard deviation upward from the center band, and also 2 times the standard deviation below the middle band. I also summarized the intuition here. The assumption is that the volatility of asset price does not change significantly in a short period of the time. But of course, when you are gonna use those technical indicators, think about the underlying assumption. If something big happens, let's say the company is getting worse or getting better, then you have to incorporate that knowledge into such technical indicators. And the other assumption is that the price will be if the price deviates from the moving average by 2 times sigma, how likely is that going to happen? It's very unlikely that the price will get outside of the two times standard deviation if nothing big happens to the asset. So now with that introduction, let's get into some examples. So this is Amazon stock price. We have seen this picture before. If we just change the period of the time, you can see that every time the stock price touches either the upper band or the lower band, there will be strong resistance to the stock price. Let's also look at another stock, Tesla. It's been going up very dramatically in the past year, but you can see that every time it touches the upper Bollinger Band, it still gets some resistance, and when it touches obviously the lower band, it also gets some resistance. So I would say Bollinger Band is a very good technical indicator to guide you through about when is a good buying or selling opportunity. We could also take a look at some other tickers. Let's take a look at Apple, AAPL, Bollinger Band. So you see it's very similar. It also fluctuates within the Bollinger Band. If you want to see the Bollinger Band, you can pick Bollinger Band here. And remember, there are 2 parameters you can pick for the Bollinger Band. You could set the period of moving average and standard deviation to be 50 days, and you can also let's say set standard deviation to be 3 days. And let's take a look at this picture. We could cross out the previous version. Then you see this Bollinger Band is more lenient towards the band becomes wider. We allow 3 times standard deviation, and the price is smoother because we consider past 50 days, so you will see a smoother center band. But 20 periods and 2 times standard deviation is the recommended setting for most of the resources you can find about Bollinger Band from the internet. So that's something that people have found to be effective and empirically useful from probably a very long history of the time. So you can just simply take that parameter setting as other people recommended. Okay, so that's all about Bollinger Band. Thank you everyone for watching.